Welcome to our daily market update. It's Tuesday the 24th of March. The past 24 hours have really been another volatile and testing trading period where markets and investors from around the world have been scrambling to make sense of data coming out, as well as the policy responses from both lawmakers and central banks. Of course, in the UK, we saw Prime Minister Boris Johnson step out last night and effectively lock down the UK in an attempt to slow the growth of coronavirus through the UK population and also take the pressure off our health service. In the UK, we have already seen policy response address the cash flow needs of both individuals and small corporations. I think we're going to probably see this extended, but it's a very encouraging sign that the government is acknowledging that there is a need to keep corporations alive and flowing, and that there is a significant need to make sure that individuals who perhaps have very low savings rates are looked after and made sure that they can get through this too. If we go over to the US, we see a very different story. We see that there is still a lack of coordination between central bank and lawmakers. The US Fed, being the central bank, has unleashed a very optimistic program, a very large program, and what is essentially can be referred to as unlimited QE, with them stepping into areas which previously they had said were off their remit and were more fiscal in their policy response. But they are happy to step into those at this time and really try and give the market some confidence. One of the big things that they announced yesterday was that they are also going to start buying commercial paper, that's commercial debt, both in the primary and secondary markets in an unlimited amount, or as much as needed, as Jay Powell put it. The markets are taking the US Fed's policy response to this in an extremely positive light, and this is why we're seeing the US futures markets pointing to a large gap up on the open this morning, and also this followed through in both the Nikkei 225, which was up about 7%, and also through European markets, the futures pointing up at the open. The Senate, however, failed to get this relief package, this support bill through, which would see about $2 trillion in support for a number of different areas of the economy, but really make sure that cash is got to individuals and small businesses during this time of economic shutdown. There does also seem to be a little bit of a disagreement in the actions going on and those of President Trump. Many states are closing down and locking down, whereas Trump is seemingly wanting to actually get the workforce back to work very quickly. If we come back to the UK and this lockdown, the very positive light that we can take from this is, of course, we're going to hopefully see a much slower infection rate through the UK population, which really buys us time, not only from a medical infrastructure point of view, but also hopefully from a testing point of view, because it's going to be testing which is going to be key to getting the workforce and economy back on track as and when lockdown is lifted. If we look to the to other countries for kind of some model for this, then of course we turn to China, who announced last night that Wuhan, the city where this virus broke out, is now lifting its quarantine on the 8th of April. And this is something that investors are going to really want to start looking for before they start taking too much risks again. One of the things that investors want to know is how many businesses are going to be defaulting. They want to know that the financial system is going to keep flowing. This was one of the problems if we go back to 07 and 08. But the other thing that investors want to know is how long are these economic measures, these lockdowns, really going to last for? And until we see that sort of announcement that we've seen from China, I think the risk-on environment, the argument is weak for investors really going back in 100%. It could be a very different environment that we go back to. I don't think we're going to see mass groups or concerts anytime soon, but testing would thankfully allow many businesses to go back to work and the economy to really start getting back into some form of normality. What we've seen as well happen is, of course, the cash flow saving programs increase. We had a number of companies come out yesterday in the US and decreasing dividends, cancelling the final dividends, which took about 2% off the yield on the S&P 500. Similarly, we saw companies in the UK also cut dividends. Yesterday we were talking about Royal Dutch Shell, who had cancelled some of their CapEx programs as well as their share buybacks. And we also saw Airbus, who had cancelled their dividend. We continue to monitor all our positions. We continue to look for strength, and actually some of these cash saving schemes that companies are enacting is really showing a degree of not only resilience but taking responsibility and not simply waiting for a handout to see them through.